Good evening, everybody, and welcome to the Sunday Market Breakdown. It is August the 18th, and yeah, we're going to be doing it once again, breaking down the market. Going to be looking at this week's trades, the trades taken, why I took them. It's always the same reason, always absolutely the same reason. And hopefully by now, if you've been following along, this is the 8th week in a row where I've actually gone live on YouTube to do this. I do it so that people can understand the practicality of some of the things that I actually teach in Leveled FX. Leveled FX, if you don't know what that is, if you're joining for the first time, it is a community that I run absolutely for free over on School, on the School platform. So this is it right here. Zoom in a bit so you can see what I'm talking about. Yeah, it's basically just the a community and classroom area, as well as a cool sort of point system where you can actually come in here, interact with other members, and yeah, the stuff you share, you earn points and you get to level up on the leaderboard. And for leveling up on the leaderboard, you get to win cool prizes and stuff. So yeah, if you've not checked this out yet, it's school.com/leveledfx. And over here, basically, if you've never traded before, we've got everything that you could possibly need to know as a beginner trader. I try and cut out a lot of the usual, let's say, I give you what you actually need to understand in order to start trading, rather than trying to teach you absolutely everything there is to know about the financial markets. So that's there. It's free for anybody who wants to join. And then within this, also absolutely for free, I give away the system, my approach to the market. I don't even like calling it a strategy, to be honest, because I just believe that I trade with the market in the way that the market works. So yeah, it's all there. If you want to come and learn how I'm doing this and how I'm entering the trades that I'm about to break down for you this week, come and join. It's completely free. For anybody who wants to do that, it's school.com/leveledfx. I'll pop a link in the description of this video. If you can't spell Leveled FX, it's LEVELLED-FX. And yeah, totally free. So that's all I'll say on that for now. This week, before I get into it, I'm just going to see who is live with us right now. So people are still joining, which is cool. Mahal, hello. Hello, Mahal. Welcome to the Sunday Market Breakdown, 18th of August, where we look at the trades taken this week. So anyway, I'm a bit short on time today. So what I'm going to do is just dive right in, because I have a habit of going over the time that I allocate for this. I usually allocate an hour, and I think maybe 80% of the videos I've done live here end up going over the hour. So I'm just going to run through my trades real quick, and yeah, then we'll have a quick look at the economic calendar. One thing that I am a really big advocate for is understanding market conditions. So a lot of the reasons why new traders, even experienced traders, well, if you're experienced, you should know this stuff really. But basically, if you're just a trader that wants a mechanical strategy and you want to do the same type of trades all the time, you are going to get smashed by the market when you fail to see a change in conditions. And so being able to look at the economic calendar ahead and sort of see what kind of day we're looking for, or what kind of day is going to come at us, whether it's going to be volatile, whether it's going to be calm, makes a huge difference to how I approach the markets in terms of which levels I'm more likely to take. If we've got calm markets, I'm going to be taking slightly more aggressive levels because price is likely to move a lot less in a given day. And if we've got hugely volatile data releases coming up, high impact news, then I'm much more inclined to sit on my hands and wait for only the strongest levels. And the last 2 weeks have been fairly subdued. Last week was really good. I'm actually seeing a change in my own trading as well. One of the byproducts of running a trading community now with Leveled FX is that, you know, the guys in the group hold me accountable as well. You know, I'm trying to explain how I'm approaching the markets And so with that, I'm much more on the ball. At least I'm finding myself much more on the ball than I usually would be with this stuff, which is kind of crazy because, I do trade for a living, and you would think that I would be super disciplined all the time and, looking to improve myself constantly. And one thing that I have found of late is that my trading, it's not that it's drastically improved, it's just that I've got a lot more opportunities that I would usually miss. So yeah, the community has been awesome for that. And yeah, if you are serious about learning this stuff, then I definitely encourage you to join. Hello to the new people joining. I think we've got Yuji and I believe R0831. I'm going to guess that's Josh. Anyway, good to have you guys here. And without further ado, I'm just going to load up the charts and get into it. So I haven't actually put the days in which I took these trades yet. This isn't my journal as such, but it's just a reminder to me what to go through with you guys today. So dollar Swiss short 0.8705. I believe a lot of these trades were on Monday. It was nuts. Absolutely nuts. And for the last, I don't think there's been a single week where I've had any trades on a Monday whilst I've been doing these breakdowns. So yeah, just always be open to the new things. So slight change up in how I usually approach, how I'm doing the charts. So lately we've had such a subdued market that I've actually separated my charts to try and help guys in the group, to help them understand that I'm not always trading the same way. When we've got more volatile markets, you'll see that I'm most of the time on what I call my main charts here. So you can see I've got weekly levels plotted, and I'm usually just going off the weekly and the daily timeframes to get my entries on here. And then when we've got more subdued markets, you'll find me using these charts. It's exactly the same thing, slight color change, just so that when I'm talking through things, people understand that I'm talking about intraday key levels versus daily levels or weekly levels. And that's really it. So dollar Swiss, let's hop to the charts. Dollar Swiss. Hope you guys have had a good week as well. Like if you've been following this stuff and you actually like what I'm doing here, I'd really appreciate if you'd subscribe and comment below if like any of this stuff makes sense, if you want more information about it. But ultimately the best thing you can do is join the community. So 2 trades on dollar Swiss this week. So we got this one up here and this one down here. First one, let's look at that. So what have we got? I believe this was a 1 hour level. Yes. So huge move off of here. So this is a big move for dollar Swiss. Swiss pairs don't usually move that much. I don't particularly enjoy trading them most of the time, but recently they've actually been quite active since this big sell-off that we had. So we had the big sell-off back in Friday the 2nd of August. Yeah, this last week. I'm on the hourly chart. Big sell-off, and now we've just been recovering for the last couple of weeks. And as we came up, this was a trade taken. I'd actually originally planned to take the trade from where I took my trade from later in the week. But as we came up to this level, it just so happened that average true range. So the price was kind of at its extremity of how far it was likely to move in that given day. And so I decided to alter my position from the level above to the level below, which is absolutely fine to do. Sometimes you have to adapt to the markets. It's not a breaking of the rules. It's just like moving with what's changing and what you see changing. So anyway, it was the 1 hour level. I don't want to adjust where my charts are. Okay, I'll adjust them. So basically over here, where price moved off of is where I got in. And so, yeah, I had a first area of a first target area just here where price I thought was most likely to struggle immediately. So it didn't actually take much off that, but I didn't cash a lot of my trade there. I actually cashed the majority of my trade when we hit the second target just down here. And price did go a little bit further. The full move on this was 86 pips, and I managed to cash, I think it was 60 odd. Yeah, 60 pips exactly. So 60 pips on dollar Swiss there. Why did I take this trade? Well, we had a pretty strong move in, given this spike here that we had. And then we immediately pulled back within the hour. If I drop to the 15, you can see this all pretty much happened right away. spike in, and then we came straight back out and then continued back down. So it's a nice trade, but nothing unusual about it. Completely normal stuff. So if you've been following along with these videos, you'll see that it's the same stuff week in, week out. Guys, if you've got any questions, I will take them near the end, so feel free to pop them in the comments. I see your thing there, Michal. I'll cover that in a sec. Yeah, so I'll move on to the next one. We'll come back to the other one. I'll do them in order. Gold dollar short. So let's take a look at that. Gold dollar short. Okay, yeah, this was nice as well. So, I mean, let's go to the 4 hour. This was another 4 hour refined to the 1 hour, but with gold, I always try and enter a little bit ahead, just because you can be missed on the, actually it was refined to the 1 hour. So that was the level at the time. I've since adjusted it to now be on this candle body close, because that's where we actually moved off of. But the level I had at the time was just here, which is why my entry was just there. And so, yeah, with gold, initial target was just 72 pips, which isn't a lot on gold. But, I mean, tell me if this isn't a super obvious level right here. And arguably, that is an incredibly strong move in. So the move in just off the last kind of pullback here was 350 pips. So you've got to expect a reaction from that, right? So it was a really painfully obvious level. It actually hit quite later in the evening for me. I believe I got into this around 10 o'clock in the evening, which is unlike me. I'm usually off the charts by at least 6 or 7. I don't like taking trades later in the day, but it was gold. It was too obvious not to take. And so that was it. Strong move in. We were outside of ATR at the time. So the price was overreached, overextended, or at least at the extremity for the day. And so it just increased the chances of a pullback. And then we moved into the next day, and then we got the pullback. So the profit, I actually used CTrader for my execution. So the profit actually hit overnight. So I just woke up to small bag on gold, and then using the advanced take profit on CTrader, which is why I love it compared to MT4, MT5. If you are an MT4, MT5 trader, the 90s finished a long time ago. So sorry, that's just my joke about MT4 and MT5. Even though they've remade it and now they've got MT5, it's still very dated. But with CTrader, you can actually set it's kind of like how you usually do your take profit. You just drag it out and slap it on the chart. With CTrader, you basically do the same thing, but you can do it with a partial. So you can actually do your partial trade ahead of time and then just kind of close your charts and go about your day. So I really love that about CTrader. So if you are using MT4, MT5, definitely check out CTrader. The only downside is not a lot of brokers use it, but both prop firms that I like use it. So it's perfect for me. And yeah, gold basically came all the way back to entry. So there's a lesson in this as well, right? So let's say you've got this wick here on gold. So what I did with this particular trade is I just didn't move my stop at all. I took quite a bit of my profits here at the first area of potential struggle. If you follow me for a while, you'll know that I don't really use stop losses in the traditional sense. My stop losses are there to protect my account, not to protect me in a given trade, meaning that my hit rate is so high, and I'm not saying that to brag. I'm saying that because if you actually track levels on a chart, when you've had a strong move into them and price is overextended, and there isn't some kind of fundamental reason for price to keep going, which you would be checking because you're a normal trader that would check the economic calendar. Anybody that doesn't and wants to trade mechanically is just, exposing themselves to getting absolutely destroyed by the market. So my hit rate is high, therefore I don't put a stop loss on every trade super tight to try and protect my trade from going against me. My entry is on the level because it's an obvious pullback level. That's it. So the only thing that can potentially smash that level is a fundamental driver in the market that has taken me by surprise. And that will happen in only two cases. One, I was blind and I didn't check the economic calendar and I missed something. Or two, it's, let's say, a world event that was unplanned for, like another pandemic or some ridiculous thing that we get thrown as traders. And those are the only cases when that happens. If that happens, then my stop loss will come into play and make sure that I don't lose all my money and have to remortgage my house. So that's how I use stop losses. So the lesson here is, when you get into the trade and you're expecting price to go further than this. So this, if you look at gold, it was really moving up. It's had very little pullbacks along the way. We had a bit of a consolidation here, but it was still pushing on up without any real serious profit taking. You would expect that from this move here, that there'd probably be a little bit more of a pullback than what we saw there, but there was nothing. It just carried on up. So gold was extremely bullish and due a pullback. So I wanted a lot more than 71 pips off of a almost 1,000 pip move up into that particular level, right? If you're taking into account the whole move. So given that, I was expecting to go lower on gold. So what I'm not going to do as a trader is, you see your first profit get taken. I'm not going to move my stop loss. Where is it? Stop loss. Yeah, by the way, I don't use this stuff. I don't know why. I refuse. I refuse to conform to what is expected of me as a trader on YouTube. So I'm using my trend lines that I do like this. So what you don't want to do is move your stop loss to break even just because the trade's gone in. More times than not, price will come back to retest the entry before moving lower. And I've just seen it happen so many times that if you do that, you just miss out on so many pips. So like if I'd done that, I would have missed out on all of the pippage down to here, which is almost 300 pips. It was 273 pips for the first day of potential struggle. And what I should have really done when price got down here is took a buy. But I was not doing that for some reason. So that was one of the things that went into my journal. And there were other missed trades this week as well, which actually some of the members in the community got, which I'm extremely proud to see. Proud dad moments all week this week. People taking extremely awesome trades, which I'll cover in this video as well. So Mahal, you're on the call. I'm going to cover that because yeah, you did some awesome trading this week. So I've got to get that in here. So anyway, stop loss, break even. Just don't do it. Leave a bit of risk on the table. Remember, you've already taken your partial here. So if price comes back against you and let's say you get stopped out higher up, it's still not going to wipe out all your profits from your initial trade. And if you just, don't take my word for it, right? But if you're a serious trader and you're actually journaling this stuff, you will see that 9 times out of 10, actually, I'm not even going to say that. I don't know if it's 9 times out of 10, but a lot of the time you will see price come back, retest and go again. And some people even use that as their trading strategy. They call it confirmation, right? So they wait for the pullback, whereas I'm not waiting around. When I see a strong move into the level, I'm on that pullback, whereas some traders might see the pullback occur, then wait for the retest and then get in. But that's just not how I trade. Anyway, gold, yeah, really delivered and paid very well. The other one making a special appearance this week was oil. I haven't traded oil in a long time, but again, like on gold, this one was just one of those trades where it was late in the day. I think it was around the same time as I took gold, if I remember. Maybe it was a little bit earlier in the day, but still getting on to winding down time for me. Had to pause Netflix for this one. I joke. But essentially what happened with oil, let's take a look. Oil was, so very similar situation to gold. We had a pretty monstrous move up into this level. And why I ended up taking this level was because I had an alert set at it, thinking that price wasn't going to get there in a very long time, especially after I saw this big sell-off here at the beginning of the month. So we had a massive sell-off, and then price came all the way back up. And to be honest, I was checking this every week, but not every day. And price came all the way back up. And basically my alert went off at the level And I remember it was late in the day. Yeah, 9 o'clock. That's right. It was just before the gold trade. And this was just too much of an obvious level. We'd already broken the highs, these 3 highs here. So we'd broken that. And then the only level left, the one that was still standing, that was ready to be tested, the last man in the row, was just waiting at the end. And like I said, it was a bit later in the day, but average true range, meaning the expected amount of movement for price to make in a day had been breached. Price was overextended. So what I do, whipped out the phone, hopped in the trade, and this one was awesome as well. This one also paid overnight. So same thing again, C-Trader, Advanced Take Profit, absolutely legendary piece of software. If you're using MT4, MT5, just stop. Just stop. So 181 pips on oil to the first area. And basically the first area was determined by this little interaction we had here. So what I'm looking for is the area in which I think price is going to start to struggle most. And so to me, that area was essentially this, where we had that. I'm on the 4 hour, but if I drop to the 1 hour, it might be more obvious. Not really. But essentially what happened was price had come up here and then pushed back down, very small pullback, and then gone again. So you've got to really drop down the time frames to find where price is likely to struggle. And as you can see, it's exactly where price did a little bump. A little bump in the road and then continued on down. And then second area of potential struggle also should have been a buy for me. I would have hit a bit of drawdown if I did buy there though. So not the end of the world on that one. But like obviously here we had a key level. And so once price got down there, I cashed the rest of the trade and that was it. Simple stuff. Again, all of this stuff is what I teach in Leveled FX. It's not a strategy. It's just how the market moves. Market gets big money comes in, gets pushed one way. Big money has to take profits. When big money takes its profits, a pullback occurs. And on the pullback, that's when we get in and we ride that wave. It's literally all there is to it. And then everything else, because it's so simple to execute on, it allows you all of the headspace and the freedom to focus on all the other aspects of trading that I believe are probably a lot more important than a strategy. I think a strategy can work for anyone, any strategy as well. The problem is the complexity of the strategy is what will trip the trader up, because in order to execute, they will hesitate because there's too many things they need to check. Liquidity, grab, smart. I'm not even going to go into it, but you get my point. Like if you keep trading really simple, then everything else that you get to work on is where you get the biggest leverage, like your psychology, working on your risk management. And yeah, I honestly believe if you focus on those things over, trying to perfect the strategy, you'll just have a lot more progress as a trader. And as a beginner, you'll actually see success a bit quicker. And then what you can work on is your edge. So you can start, adding additional confluences to help, build a story around the level that you're going to take. But essentially, keeping it simple is going to be what heavily rewards you, especially in the beginning. Once you've been doing this a few years, you can start getting a little bit more fancy, a little bit, if you want to. But to be honest, if something's working for you, why would you change it? Like I know traders that, make a lot more percentage than me, or claim to. But I don't care, because the thing with trading is it's a long-term game. And the only thing that really matters is how much capital you acquire. Because, if you're a trader and you just make 2 to 3% a month, well, guess what? You're probably in the largest pool of traders who are consistent and profitable over the last 5 to 10 years. The traders that are claiming that they're making 10% month on month, 20, 30%, I mean, it's just, think about it. It's ridiculous. If somebody was doing that, they'd be hired by the banks and paid a lot of money. So, yeah. I'm not saying it's not possible. I'm just saying that for the majority of traders that are starting out, you definitely want to be doing stuff that's easy, simple, so you're not tripping yourself up. So, yeah. Right, where did we get to? That was the oil trade. Beautiful trade though, right? I mean, let's just take a look at that once. One more look before we move on. Just the most obvious thing ever. And so, yeah, hopefully this stuff is sinking in. Anyway, Euro New Zealand. So the thing about Euro New Zealand is, so a quick look at the old economic chart here. Am I on last week? Yes, I am. 11th to the 17th. This is the economic calendar where we see which data releases are up and coming. So again, last week, very subdued. We had nothing on Monday, which is why I had so many aggressive trades that all worked out. It was a calm market. So James moves to the calm charts. That's it. Tuesday, we had a bit of GBP, unemployment change in the morning. That didn't signal any trades for me. But yeah, Wednesday, we had the Royal Bank of New Zealand interest rate decision. And the thing with anything that happens in Australia or New Zealand, I am usually watching the back of my eyelids at that time of day. So I miss a lot of these trades. I actually missed a really cracking trade on Aussie dollar, where did we have the Aussie news? I think it was, might have been the employment change on Thursday. I think that's what it was. I don't think we had, or maybe it was, no, it was the employment change. We'll cover that in a sec. But basically, Wednesday, we had the interest rate decision. Interest rate decisions are usually fairly big movers of price in any market, especially with the world where it's currently at, where everyone's afraid of inflation, that no one really knows what the banks are going to do to try and bring it down. And so, yeah, interest rates really get the market moving. And so if I jump over to Euro New Zealand now, I'm blind. Right, so you can see where the interest rate decision happened. Boom, big old candle. Where we moved 240 pips initially. Well, we didn't. We moved almost 300 pips off the level, literally level to level, which was beautiful. So whilst I was asleep and couldn't capitalize on this level getting hit here, I was awake when the level got hit after the big move. So what happens after a big move? Profits need to be taken. So what do? We hop in the trade and we ride the profit taking back the other way. That's it. Otherwise known as a pullback. I don't care what you call it, whatever you want. I call it profitable trading. So the move came in like this, bit of a wick here. Drawdown was about 40 pips, which is okay on Euro New Zealand. It's not a Forex major. You can expect a bit of volatility there, especially after a move like that. And we ended up getting the move that we wanted. So again, my first area of potential struggle. Why was it here? It was here because this is where we'd had a bit of an interaction before. So if I drop down the time frames, be a bit clearer. There you go. So price moved up. Then we did actually have a small pullback here. And then price just crept up a bit higher and then pulled back off the level. In here, there was nothing significant enough for me. So that's why I was kind of like, we got to wait till we get higher. So as we got higher, that was the reason to take the trade. And then I was out with some profits. What did I take on this? 48 pips. First area of potential struggle. And then I held the trade down lower. Why did I hold it to here? Well, here was because, again, that's where we had another interaction. You see that wick there? That was a push up and a pull back. We've got to go down the time frames once again. And there you can see it. That's literally it. Like, the same reason we get into the trade is the same reason we get out. It's just when we're getting out, it's because we're the little guys. Like, we're like little specks in the ocean of the order book that the broker receives or the market receives in terms of moving price. Like us with our few lots that we chuck on. And then there's the big money that chuck like 700 lots at a move. And so we're getting out because price is struggling and they're getting out because price is struggling. It's just they're getting out at more significant levels. We're locking in profits because we don't want to be left holding an empty bag when we've watched the move go in our favor, come all the way back and then go against us, knowing that the trading idea actually worked, but we took nothing off the table. So what I get new traders to do is take the majority of their profits at the first area of potential struggle to avoid that psychological slap from happening, because it really feels crap when you watch your trade go all the way down here, you take nothing. Well, let's say you come all the way down here, you take nothing, and then it just carries on up. Like, that's the worst thing that can happen to you as a trader, because you feel like you failed like it didn't work, whereas it did. What the problem was your greed, right? You wanted more. So I always try and force traders to take profits early on, just so they lock something in, and then it just fixes the psychology for allowing the rest of it to play out. And then over time, as you develop as a trader, you can start actually you journal from the beginning, but over time you look back at your data and you say, Euro New Zealand seems to hit my second area of potential struggle, like a real high percentage of the time. Maybe I should start just waiting for the second area of potential struggle now. But you can't do that unless you've actually got the data, which now has given you the permission to do that. If you do that from the beginning, you're going to get smashed, and it's going to affect your psychology, and you're going to give up, and you're not going to make it as a trader. So important lessons there. That was the Euro New Zealand trade. What day was that? I think it was Wednesday, right? Okay, so Thursday. And then if I look at the Aussie dollar trade that I missed, and again, like I had my eyes closed at this point, but off the back of the data release, Aussie dollar came down, tapped into a level, went on to do almost 100 pips so far, which has been quite good for Aussie dollar lately, because since this move back here, it's actually been quite consolidated. It has been moving up, but like painfully slow without any significant moves. So yeah, it was good to see that one, but I missed it because I was sleeping, which is fine, but we can still learn once we journal afterwards. So dollar Swiss, I think this one was Thursday or Friday, Thursday maybe, dollar Swiss. Same thing. So I basically left my level on that I had originally planned for this trade. You remember in the beginning I said that I actually moved it. So I moved it down because we'd already, price had already slowed up a considerable amount. I believe there was some other pair that I was watching. I can't remember which one it is right now. If you're in the community, I actually posted it in there. But yeah, that was the reason I changed it. But anyway, this trade came up. Why did I get into this? Went a bit offside on this one, actually. So this one was, I think it's the 4-hour level. Yeah. So, yeah. Ideally, I should have been in there. Like if I wanted to, let's just see, is that the 2 pips from there? I think that's what I did take. No. So my level was placed here because that's where price moved off of. But I think I would have, looking back, I think it would have been a better approach to come from here. So again, like I'm not God. I don't have all the answers. This is just the type of things that I put into my journal after the fact that I've traded, or I've placed a trade and I've either taken profits or even I've taken a loss. It doesn't matter to me. Like the most important thing is that I learn something or try to learn something from each trade that I'm in. So anyway, price shot back up. Like this was a very sharp move in. And so I was like, okay, we're on, let's take this level now. And that's what I did. So a little bit of drawdown on this one, 30 pips, which I suppose for a dollar Swiss can be a bit, but it's just factored into my risk management. Again, I don't use stop losses in the traditional sense because you're just going to get stop hunted. And I believe in my trading idea because I have the history to show what the hit rate is. And I'm jumping on here each week and showing you the approach. So yeah. But anyway, that ended up working out. This one I played a little bit differently. It looks like it's quite a big move. It's not. It's about 40 pips. And the reason I actually put my first area of potential struggle down here is something that I'm testing at the moment. I'm not 100% on it, but just to show you like what I do when I start to see things over and over again. On certain pairs, when a gap forms after a, and I know there's a certain type of trader, it's a gap trader. I'm not against it at all. Just an observation of mine that when you actually get a data release like this, where we get a lot of dollar strength for whatever reason, usually a gap gets formed. So if I drop down to the 15, you can see that. And so what I did is I dropped down to the 15 to start to identify where I was going to have my first area of potential struggle once the trade triggered, right? And whilst I had an inclination before the trade triggered, I always revise it after to see how price got there, to see if there's any new potential areas where price might struggle. Because, you know, if I'm planning my first profit target from a day ago, it's most likely going to have changed now because of how price got to the level. It might leave behind a bit of a footprint where price can now struggle, which I didn't previously see because it hadn't happened yet. Right. Remember to breathe in between what I'm saying. So a gap was formed here. And my theory is that when that happens and a big move occurs, or not a big move, but a big spike, the gap needs to be filled. So what I did is I put my first area of potential struggle, my first profit target, just above the gap fill. And we filled that gap pretty much perfectly and then moved off of it like it was a level or something, right? So that's not something that I know is a given yet, but what I started doing yesterday morning is just going back over the data releases where we had a strong dollar move, and I'm checking a few pairs, and I'm basically just journaling down what happened and whether the gap got filled, and then how much time it took to fill the gap, how much drawdown from the level was there before the gap filled, things like that, just to build up an idea of like how often these things occur, because all of this stuff is just data and maths, really. If you put fundamentals aside, fundamentals for me are just turbochargers. Like, I'm still taking the same level. We had a fundamental driver here, but I'm still going to take the level just as I would if there wasn't a fundamental driver. The fact that there was a strong move into the level was because there was a fundamental driver. That's when this type of trading becomes very interesting. It does invite more drawdown when that happens, but the idea is that you just get there a lot quicker rather than having to wait a few days for price to eventually get to your target for your entry. The fundamental, the data releases can actually help you get there much, much quicker. So yeah, that was dollar Swiss. Not a bad trade also. And what I'll cover as well with that is Thursday's trade. So before I go on to dollar yen, what I want to do is highlight. He's going to feel very special now. So dollar yen. Yeah, so he actually had some really good trades this week. That was a very good one. So good I pinned it in the group. But the other one, which I really like the explanation for, was this context-based trade here. Mihal, you're going to be loving this. So essentially what happened here, is if we open up the chart that was posted. Nope, that's a Loom video, not a chart. Oh, I see. Yeah, so you didn't put... where's your chart? You didn't post the chart. All right, well, basically, I'll walk through what happened here. So this is my idea of really, really solid market awareness and trade execution. So on Thursday, there was an area marked up here, right? So one of the confluences we use to know when a pullback is most likely to occur is average true range, because it kind of marks the last 20, it takes the last 20 days and marks a high and a low based on how far price usually moves in a given day. So it's a nice indication as to whether or not a currency pair is overextended. And if it's overextended, the chances of it pulling back increase dramatically, right? And so with that, we didn't have anything on the daily, no strong sort of level in this region. If you look at this, it's just kind of like price just smashed right through it, didn't really leave anything behind. Nothing really on the 4 hour. And we don't look back here. We take only the most recent price action. So again, smash through, nothing there. But if you look on the 1 hour, there was actually an interaction here with a sort of level where we moved up and back and then off again. So there was something, but it was on the hourly level. And this was a fundamental driver. We had dollar strength pushing through. And I believe this is the same spike that I just showed you on dollar Swiss, right? So dollar strength, dollar Swiss racked up, and euro dollar shat itself. So we came down to this 1 hour level and then moved away. Now, that for me on its own is a little bit risky because we've only really got average true range as our kind of confluence here and a fairly weak level whilst having a fundamental fundamentals drive the market, at least move it here. So price could have easily kept going from here down to here. But what I really loved about this trade is this particular trader also used the dollar index as a confluence, which I really liked. So here this was the same candle again, where we had the dollar strength on Thursday. So big dollar strength, smashed through quite a few levels on the way up. That one's now a level for more recent price action. But we had this 4-hour level here, and euro dollar pretty much hit this level. Well, the dollar index hit this level right around the time that euro dollar hit its average true range and made its pullback. And so you see that the dollar strength ended here and completely reversed on itself. And so this is a perfect example of context-based trading, where you use another instrument to determine when it's time to go. So if you're unclear about which level to take, understanding which other instruments support the one that you're looking to trade is absolute key. It will add so much more, what's the word I'm looking for? It will just add a lot more probability to what you're looking at doing. And so this was just, for me, perfect execution, because there was awareness of it happening, and the fact that it hit that level right around the time that euro dollar came in and hit its level, it just was a key indicator that the market was moving back. I wasn't actually in this trade, and so that can happen. That was a missed trade for me. It wasn't obvious, so I wasn't looking for it, to be honest. Just one of the other benefits of the community, really, like people taking on board what I'm talking about, what I'm sharing, and implementing it. So hats off to you. That was awesome. So now I'll just cover off this dollar yen trade, and then, as always, I feel like I'm running behind. I felt like I had so much time, and now I seem to still waffle on about stuff. But anyway, if you guys, hopefully you guys find this valuable. I keep doing them because I do this work anyway. Like, this is the work that it takes, to force yourself to look over your trades from the week and learn from them. And so me sharing it with you guys hopefully helps you. Definitely helps me. As I said, I've taken a lot more trades recently than I usually would have. If you look back to like the first 1 or 2 weeks of doing this, I was typically taking like maybe on average 3 or 4 trades a week. And more recently, I mean, what are we looking at now? We've got 1, 2, 3, 4, 6 trades. So I've almost doubled my activity in the markets, which you can imagine is also reflecting on my P&L, which is very nice. So dollar yen trade, simple stuff here as well. My entry was a bit crap, to be honest. I went off this 1 hour level here. So it was a sort of, it was the 1 hour level because that's where price had moved off of. But price actually went a little bit further, and so I had to go offside about 40 pips on dollar yen. But it's a yen pair, so 40 pips is like 2. It's not like 2 on pound dollar or something. It can be expected. Like on a yen pair, a bit of drawdown, no problem. Yen pairs move a lot more than other pairs. It's just a lot more volatile. So we actually ended up moving off the 4 hour candle body close, this one up here, pinned it absolutely perfectly. I wish I could show you that was my entry, but it wasn't. My entry was here, which also is perfectly reasonable. If any of the traders in the community showed me that, I'd be like, yep, sweet, nothing wrong with that. And so, we had a bit of correlation here with the Nikkei. So Nikkei hit its 4 hour level here and then started pulling back. And this, I believe, was the main driver for all yen pairs to start pulling back when they did. This was New Zealand yen. Not much going on there either, and I'll show you why in a sec. Aussie yen, also not so much of a pullback, and kind of gave it all back. But these, any pair that wasn't a dollar pair was also being thrown around a bit by some dollar volatility that we had. So we had the Japanese stock market, which was lending. Let me get this right. My dyslexic brain. Yeah, so when the Japanese market sells off, we have yen strength. because it's the same as the US stock market and dollars. When people sell their stocks, people get dollars in return. Same thing with the Japanese stock market. You sell your stocks, you get yen, which strengthens the yen. Not always, but like you look at the charts and you look at what other things are doing, and then you form an opinion about what is the driving force. It's not like some website you can go to and go, Google, like what's driving the Nikkei right now? Like no one's going to tell you that. You need to do the work yourself by looking around. But when you do, you'll see that it starts to paint a picture of what's going on. Around the same time, we had the dollar weakness kicking in. So off the back of the Thursday trade that was taken on euro dollar, the dollar started giving everything back that it had gained and basically just returned to where it started. And so dollar yen was the one to be in because we had both the pullback on the Nikkei and then dollar weakness took over a little bit later in the day and pushed it even lower. So that's kind of another way that you can use context-based trading, or how I used it in this instance here. And so, dollar yen. I actually had my second area of potential struggle a bit lower on this one, just down here. But because it was the Friday, I just decided I'd had a good week and I want to just close out another partial on this trade. So I've left a very, very, very small position on, like so small that, because I'm quite bearish on yen pairs, just because they've been so bullish for so long. I mean, look, it's just been going up and up and up and up and up forever. So what I'm trying to do right now is build a bit more of a position on the yen pairs. So I've left a very small position on here, but even if we were to continue, so from up here, if we were to continue down, like to get 1,000 pips on that, it would still build up to be a considerable size, which is why I always think it's worth just leaving a little bit on, even if you've got a small account. It might be like, $20 now, but it can build up and, it could end up becoming $1,000 or something. So, that was the dollar yen trade. I think there's much more to say about that, really. It was a contextual based trade, using a level to get into it. That was kind of it. Now, what did I say I was going to do next? If you guys got any questions, by the way, I see we've written some things in here. Hello, UG. Went from demo 100K account back to 1K live account this week, already 1.1%. There you go. Yeah, that's good to see. And also your trading's been phenomenal. I think you could be more active, but you only know yourself what you're ready and willing to do. But some of the trades I've seen coming from you have been really strong. And like, I don't want to say advanced because to me, and I want for you as well to also see it as being quite simple trading. But what you're doing this week with the context-based trading is advanced to be able to execute that way. Because, looking around the market, forming a decision, having that confidence, then going, this is why I'm entering, that is, to me, that's advanced trading. Like, that's a trader who's thinking calmly about why they're getting in and building a story around it and then seeing it through. What I would like to see is how you executed on your management of that. So if you got any questions about that, we can cover it off, but really good stuff. George, good to see you. Jim R. Hello. How do I say your name, man? Is it Zolt? Zolt? Dizzy? Good to see you here. Don Trades Gold. Hi, James. Came here from school. Good to see you, Don. Thanks for being on. Appreciate the watching. Josh, almost 100 subs. Let's go. Yeah, I know, Josh. I've got to be careful. Like, people are going to start calling me a YouTube course seller. So, go easy on those subscribes. I don't want to get too many. Anyway, yeah. So that's all the trades I took this week. Quick look at the week ahead, shall we? Let's change the dates here. Have a look at what FX Street's going to be here. What am I doing? 18th this way. Thing is, I have to like blow this up so you can see it on the screen. That's my usual size. So like when I got it here, it's like It's like how my dad has his text messages. Just gives me his phone. It's like 2 words per line. It's impossible to read. I hope I don't get like that. Right. 18th. Yes, that's where we are. Sunday the 18th. Again, another light Monday. Absolutely beautiful. So we'll definitely be having a quick look across the markets to see if there's anything decent on that. But yeah, Monday, very light day. So expect your intraday key levels to work. Tuesday, RBA meeting minutes, a report that will get released. Doubt we'll see much from that, but just be aware of it. We've got CPI, Bank of Canada on Tuesday. That could be good. Let's have a quick look at where we're sitting on CAD pairs. Pound CAD, nice. So yeah, if we could get up to this level, I've been waiting on that. I was hoping we'd get there on Friday with the pound data, but we didn't get there, unfortunately. We pulled back from here, 58 pips. Didn't get an entry. Looked like it worked off of this wick. I wasn't trying to pick a magic spot on the charts that would actually mean something, so ended up not getting involved in that. EuroCAD, same. So basically what I'm going to be looking for on Tuesday, we've obviously got Monday to get out of the way, but we do have that as a level potentially. Only thing I'd be aware of is we have pushed up, failed to get lower, and then we've kind of, if on Monday, like when we open up, if we can do something like that, I'd be much more inclined to take that level here. But if we just continue pushing up, and that's where we arrive on the Tuesday, I would definitely alter my opinion there and perhaps wait for something up here to sell off. Equally, price can go the other way as well. Just very biased for sells recently. Don't know what it is. Market recovering. So yeah, pound CAD looks nice from that level to me. I don't think we've got much after that really. That just looks like a dog's dinner. That just looks like someone vomited candles on the chart. So I don't really like that area very much at all. Even if I look at the weekly, it just looks like someone just rubbed ice cream into it or something. It's like, I don't know, it looks terrible. So if we can get a reaction off that level, that's going to be my preference. If we were to move higher, we've got these awful wicks up here as well. Maybe something up. Look at that gap. Good Lord. So I'm sorry, Robel. I assumed you were someone else. Like everyone's got these weird YouTube handles, so I've literally been thinking you were someone else for like the last 5 weeks. Are you in the community? I don't know anyone by that name, so apologies. I don't know why I keep going. Yeah, I honestly thought you were somebody else for the last 5 weeks. That's really funny. Sorry, man. Where'd I get to? Oh yeah, so Tuesday CAD stuff. Also, didn't look at all the CAD pairs. Aussie CAD doesn't really look that obvious. Let's have a look at the daily. Love something up there, but I don't see us getting there. Not by Tuesday anyway. So maybe there'll be some buys on the CAD. I don't know, but New Zealand CAD potential. That looks nice, doesn't it? That looks delicious. So if we had like pound CAD, Euro CAD, New Zealand CAD alignment when that level hits, then that could be quite nice. Dollar CAD, of course, we've got to take a look at this. Dollar CAD, I was waiting on that entry because of average true range. Yeah, so I was waiting for the price to be overextended. But what's going to happen now, of course, is that when we open tonight, Monday, average true range will also move with price. So it's going to come lower, meaning that probably these lows are going to come into play. But I don't know. We've got nothing on Monday, CAD CPI on Tuesday, and so nothing really on the dollar. So it's quite likely that the dollar will hit its level and then bounce again. I can't see, like we've got nothing we've got nothing to breach this level right now. So I'd most likely anticipate us moving back up from here. I say that, but let me have a look at the rest of the week. Wednesday. Oh, we've got FOMC. Okay, so Wednesday we could get a move on. So it'd be interesting to see where we end up midweek, like end of Tuesday with the dollar index. If we breach these levels, then I think we could be heading south for a while. But if we stay above, we could just head back up again. But what I think is none of your concern, and you definitely can't do anything with what I think. You also can't do anything with what you think. We can only trade what is. And for that, we need price to move strongly into a level so that we can ride the pullback. So we don't try and guess, but I do like to at least form a story about what could potentially happen. So yeah. Euro PMI on Thursday. So potential for a little bit of euro volatility. Global manufacturing, dollar Thursday. So, and then Friday, we've got New Zealand retail sales. Be interesting to see if that has any impact on the currency, if it comes in terrible or something. So yeah, and then we've got a Powell speech. That would be fun. So basically next week, very light start of the week, very similar to last week. And then as we move into the week, we're going to have a bit more heavy stuff going on. So yeah, pretty much nothing until much later on Wednesday. We've got the CAD thing on Tuesday, so be aware of that. Look for some juicy CAD levels if we get a decent move off of CPI. And yeah, that's kind of my take. But Monday, Tuesday, expect intraday key levels to work. Market conditions should be calm, unless something crazy happens in the market. You never know. What are you talking about now? Monkeypox or something? I don't know. Whatever the next thing is, just be aware of that. But other than that, I don't see anything too crazy happening next week. So if you've got intraday key levels on your chart, definitely don't be afraid to be slightly more aggressive. So anyway, we're coming up to the hour. If you guys want to know exactly what I'm doing with my charts, Leveled FX community, school.com/leveledfx. Go check it out. It's a load of fun. We've got some cool people in there. Still pretty early days with it, but it'll just grow over time. It'll do its thing. And I'm having fun with it. And it's really good to see the feedback that I've had so far from certain people on how they're finding things. So yeah, if you want to be one of my 100 funded traders by this time next year, my goal is to create 100 funded traders by this time next year. Some of the guys in the group are already funded. They joined funded and are just looking for a little bit of help and guidance to stay funded and scale up, which is also really cool. So no matter what your level is, if you're absolutely brand new to trading, got you covered in here as well. There's a beginner's kind of fast track to cutting all the stuff that would just confuse you and take you months to learn and understand. Instead, I try and cut through that and get you to a point where you understand enough to actually start implementing some of the things that I do. And then over time, you will refine your edge by understanding more about how the market moves. I think the less you know from other places, the better. I try and tell people in here that try to unlearn most of the things that you've learned so far. And I don't say that from a place of arrogance or that, my way is the best way. I don't think that at all. I just know what worked for me. And to me, it's logical that if you simplify, you increase your chances of the stuff working out for you. If you make something complicated, it's far more unlikely that you will succeed with it, because complexity kills everything, right? So anyway, that's Leveled FX. If you want to join, go and join. I'm going to go ahead and end this live stream here because I have got a thing I've got to run to. But thank you so much for joining, guys. I really appreciate you being here. And I hope to see you on future ones too. Anyway, take care and have a great weekend.